Good evening and welcome to my end of the week recap here for SPY and trade plan for next week. Let me go over my trades real quick here. Monday had a nice gap up, so I tried to chase it with this new strategy that I have. So I took these 30 October 304 calls here at 87. Did work with me here for a little bit. I expected a bull flag measured move up to I think it was about 305-ish. Obviously didn't work out, so dumped those for a small loss. Tried to get in as a break back. Tried to break back above the VWAP right here at 75. And at the end of the day, I actually dumped those here as we failed to put in a new high, and I just didn't look like the way that SPY was setting up here for that day. Tuesday, one of my favorite setups, had a gap down open here, took the 303 calls at 101, reduced some on this initial pop here at 107, which is not my favorite thing to do. I mean, might as well not even take the trade if I'm trying to get 6 cents out of it, but it is what it is. It did start to work, so I took some off at 116, 123. The rest stopped me out here at 109 once it rolled back over. So overall, ended up being a decent little trade there off of the open. Re-entered some 304.5 calls here at 42, rode this wave up here, took some off at 55, 60, and out here at 63 as it started to roll over. So reading the SPY chart pretty well here recently, just a couple of areas where I got caught in some chop. Here in the end of the day here on Tuesday, I tried to get in these 303 calls here at $1 again, put in a lower high, rejected off this AEMA right here, got me out at 97. So that was that for that day. Wednesday, this actually was another gap up, so I took my strategy again in these 303.5s at 52. At that time, I didn't have a hard stop in yet, thankfully, because whatever news this was, I can't remember what it was, pushed it price down pretty fast, and I would have got stopped out, I think, in like maybe the high 20s, low 30s. So once it bounced back up, came at least somewhat close to my break even, I did dump those there at 46. Looked like we're going to follow through higher, so I took another attempt at the same calls here at 50. Once it put in this lower high, again, chopped me out here for another small little loss. So gave a little bit of the gains back that I've made so far on a couple of trades, but the winners were far more beneficial than the losers. Later in the day, it looked like we're going to break down huge bearish engulfing bar right here. Took these 300 puts here at 60 cents. Had some follow through, didn't close any out, stopped me out at 48. So got a little greedy. I was expecting at least to test this blue line down here, the 8 EMA, which obviously did not happen. Was able to maintain my composure and flip into some 305 calls here. Got in at 46, took some off for a dime, took some more off up here at 65. So nice little trade there. Into Thursday, had a nice little sell-off, inside bar and breakdown. Took these 290 puts here. Thought we were going to come down much further, much faster. Being that we're coming into the end of the week and bulls have really been in control. So took these 290 puts here. Held those overnight and actually took those out on this gap up over here for just over a 50% loss, or about a 50% loss. Anyways, at the same time, I had a little trigger right here. I got in a little early, actually. I missed the official trigger on this side, but I got these 305 calls here, 18, stopped me out and just dumped them right here at 15. End of the day, I said, hey, I think we're going to gap up. Let me go ahead and buy these November 305 calls here at 21 cents. So into the close, on the closing 15 minutes, we were able to still trade SPY options. I was able to take some off here at 36, and the rest of them actually reduced in a couple of spots here Friday. Some just about right at the open at 75, the rest of them up here at 125, and then I believe I was stopped out somewhere over here, somewhere around 114. I believe I was stopped out once this drop occurred. So very nice trade there going into a Friday. I tried to also take some puts here over the weekend. I got these 29 November 285 puts just in case we have a nasty sell-off to the end of the month. I do plan on holding these. It's not a huge position. It's just a protective position simply because we gapped up here on the month. There is a possibility that we roll over and start to create a bearish engulfing month. If that occurs, we're going to break 285 by the end of the month. So that's the thesis behind those. They are very far out of the money. Any spike in volatility, I'll probably be able to shed some off. If not, as I said, it's not a huge position, just a protective play in case the market wants to do something stupid. After the morning push, I tried these 306 calls here at 17 and actually got out on this bar somewhere over here around 18 cents. So got a good fill, got a good exit. Just didn't work out fast enough, and it was a Friday. I was ready to clock out and enjoy the weekend, and here we are. So up to what I'm looking to do this week, now that a lot of the big names have reported as far as tech goes, the banks have all reported, the vast majority of them have reported, and the market seems to like what they're hearing. So As I said, we have gapped up over last month, put in a new all-time high, closed at new all-time highs, and overall looks extremely, extremely bullish. The bears are going to make this argument, hey, I do have my RSI on here. RSI is showing negative divergence into all-time highs. Well, when was the last time? You don't have to look very far to see it. You can see negative divergence all the way across back here in 2015 and into 16. Ultimately, what happened? We had a massive breakout that took off and ran away for the next 2.5 years. So I'm not saying it's a guarantee that's what's going to happen, I'm just saying that's what happened in the most recent history. I am a perma bull on the overall US market, so I'm not going to actively trade the short side. I will look to enter some swing trades and try and catch trend at my specified locations. Those are the 8 EMAs, the 21 EMAs, the 50 SMA, and the 200 SMA down here. This green line is just something new I'm trying out, so I'm going to disregard that. I should have actually taken that off of the chart here. And leave it at that. So those are the levels that I'm looking at most actively. I will look to join trend and swing this for much, much higher highs. I do still have, I believe, an old pattern that I did put on here is another W that sets up, has a measured move up to approximately, I think around 315, 317, up in this region up here. It is a very, very old drawing, but hey, maybe it is going to play out and I can say I called it at some point. But anyways, I'm going to continue to trade my style and look for buying pullbacks into any weakness. So that's what I'm looking at doing in SPY next week. If you have any questions or comments, please feel free to leave them down below. Actually, one second. Let me go back over transports. I'm going to touch on major sectors that at least influence my opinions anyway. So here's transports. One trend has now broken. This is the new one that has formed. We had a very wide range bar last month, and this year's been a whole bunch of just chop. So if we get a deal, as I've said numerous times, with China, it's going to help transports. More goods are going to need to be moved around. More materials are going to need to be moved around, all that good stuff. And this will ultimately hold up the overall market and continue to push it back up to highs. As you can see, it's still a very strong uptrending channel. And until that's broken, the market's not falling apart. On to tech over here. Again, another sector that's at all-time highs, just like the SPY. And there's no reason to believe that we're going to stop, at least not anytime soon. So looking for continuation as long as it stays above this line here. What do we call it? 198.10-ish tomorrow. And go on back over here to the weekly time frame. You can see it's much more clearly a breakout, huge gap up. Could be a sign of tremendous strength and continuation higher. So still staying overall bullish, and I will look to trade Apple on any kind of shallow pullbacks. Now on to futures, because as I always say, it's a much more fluid, much cleaner chart to look at. I have one alert here. This is 29.47. This is the high of 2018. Back below here, possibly could start to be an ugly close into the end of the year here for the overall market. That is below the 8 EMA on the monthly chart, but it is a level that I want to keep in mind of at least being present and knowing that it's there and what could happen if it is reclaimed. I do have one other line drawn on here. This is the uptrending line that just connects last January and July's high. Came up right to it here nearly on the penny on the day of Friday, right around 3,065. Maybe that's going to be the all-time high for the market. Maybe this was a blow-off kind of move. Who knows? I'm not shorting it. I am in some protective puts, but I'm not going to short this market because it simply just made a new high. So higher highs and higher lows, that's an uptrend I'm not going to short. So just some levels and thoughts there on the overall market and futures. So with that said, hope everybody has a good weekend and good luck on Monday.